This is your LMAX Exchange technical update for Monday, June 12th, 2017. Euro dollar. So the euro has been showing signs of stalling out over the past few sessions, but overall, while the market holds above 111.10, the pressure remains on the top side and there is risk for a continuation of gains up towards next key medium-term resistance in the form of the August 2016 high at 113.67. Only a close below 111.10 would take the immediate pressure off the top side. Sterling dollar. So cable is broken down below some key previous resistance, turned support at 127.75, and this potentially opens the door for fresh downside towards the 125 handle, which would be a measured move extension following that consolidation and break to fresh 2017 highs that we saw between 127.75 and 130.50. But any setback should be very well supported into this congestion zone at 125 in favor of a resumption of gains and break back towards and above 130.50 and then towards a measured move extension at 135 further up. Only back below 123.60 would delay the bullish outlook, so any setbacks that we do see towards 125 are viewed as corrective. Dollar yen. So dollar yen has been trading within a downtrend and the market is now stalled out just shy of that 2017 low ahead of 108, but overall the pressure does remain on the downside and there is risk for additional setbacks towards and below that 2017 low, which comes in around 108.13. At this point it would take a break back above recent resistance around 112.13 to take the immediate pressure off the downside. Euro Swiss. Euro Swiss has recently stalled out ahead of psychological barriers at 110, and this does put the pressure back on the downside for a retest of critical range support down ahead of 106. At this point, it would take a break above 110 to force a meaningful shift in the structure and expose upside over the coming weeks and months. Aussie dollar. So Aussie has seen a nice rebound back above 75 in recent trade, but overall this is a market that is showing signs of topping out, and any additional rally should be well capped ahead of 76 in favor of a continuation of declines back eventually below recent support at 73.30 and towards the December 2016 base at 71.60 further down. Only above 76.11, that's the high from April 17th, would take the immediate pressure off the downside. Dollar CAD. So dollar CAD has been seeing a series of higher lows and higher highs with the overall uptrend intact, and despite recent setbacks, the market is expected to put in a higher low now in the 133s in favor of that continuation of gains and fresh upside extension above the recent 2017 high just shy of 138 and towards 142 further up. At this point, any setbacks that we do see should be very well supported, with only a breakback below 132.20, a previous higher low, to negate the constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar has seen a very nice rally out from 2017 lows, but the market is now coming into some key medium-term resistance at 72.50, and only a break back above that level would compromise the overall bearish outlook for this market. Market is expected to stall out now ahead of 72.50 or be unable to establish a daily close above 72.50 in favor of a continuation of declines eventually back towards and below the 2017 low at 68.18. Only a close above 72.50 would compromise this bearish outlook. SPX 500. The S&P 500 continues with its climb to fresh record highs, with the market putting in another record high in Friday trade, but the market is now exposed for a fresh upside extension following a consolidation between 2400 and 2320 towards 2480 further up. At this point, on a very short-term basis, it would take a break back below 2400 to alleviate immediate topside pressure. Gold. So despite the latest minor pullback in gold, overall any setback should be very well supported in this market as it continues to put in higher lows and higher highs, and has recently broken to a fresh 2016 high at 1296. Look for the market now to trade eventually above 1300 and towards the 2016 peak at 1375 further up. At this point, any setbacks that we see in the sessions ahead should be ideally well supported ahead of 1230, with only a breakback below 1215 to compromise the constructive outlook for gold.